Welcome back to Teshkid FX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording has lost a key area of support at around the $0.34968 mark. We have also lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also continued to obey the Elliot structures, where I still believe that whatever we are seeing over here is the formation of this higher Elliot count 4, which is a corrective wave, and that's the reason as to why we are seeing this ABC corrective structure, where I'm expecting the wave C to fully maximize our blue target area down here in the formation of this wave 4, and also give us the low for that fourth wave to the lower side. And this target area to the lower side in the formation of that wave 4 lies between the fib level 0.5 and the fib level 0.618, which at the time of this recording we are just about to fully maximize. And before I get further into the technical analysis and also give you my next price targets here on the AGIX chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you a quick recap of what has been happening, where you can see that after making our lower low down there, we started this massive bounce to the upper side, obeying the Elliot structures, where you can see that I have this Elliot structure in red, having that as the first wave, giving us a peak at around the $0.13 mark. And after seeing the high for that wave 1, we started a corrective structure in the formation of that wave 2 before we saw that massive bounce to the upper side in the formation of that wave 3, giving us a peak at around the $0.67 mark. And in the formation of that higher Elliot wave count 3, which is an impulsive wave, we also saw this 5-wave structure to the upper side of this Elliot structure in yellow, having the wave 5 fully maximizing our minimum target areas in the formation of that wave 3. And after seeing the high for that wave 3, I was expecting a corrective structure over here in the formation of this wave 4, and using the Fibonacci's, connecting them from the low of the second wave down there to the high of that wave 3, I was able to come up with a minimum retracement area to the lower side in the formation of that wave 4 between the fib level 0.5 and the fib level 0.618, which is a target area that lies between the $0.349 mark and the $0.27534 mark. And you can see that at the time of this recording, we have almost fully maximized that target area, and at the time of this recording, we are just about to touch the fib level 0.618, which is the lower side of this target area to the lower side. We are also seeing this ABC corrective structure because of the corrective nature in the formation of that higher Elliot wave count 2 over here. And we need to be also prepared for the worst case scenarios here on the AGIX chart in case the breakdown continues and we also lose the fib level 0.618. And in case such a move plays out and we continue seeing further breakdown to the lower side, then I think our invalidation point for these Elliot wave structures is at the wave 1 high, which perfectly lies at around the $0.13074 mark. And I need to mark that invalidation point of this Elliot structure using a dotted line here on the charts. That is at the wave 1 high, and that is at around the $0.13 mark. We can mark that as our invalidation point. So in case the breakdown continues, we lose the fib level 0.618, which lies at around the $0.28 mark, then there are chances that AGIX might continue seeing the breakdown to the lower side, and we need to continue holding above the $0.13 mark for us to still say that whatever we are seeing is a corrective structure to the lower side in the formation of that higher Elliot wave count 2 to the lower side. I also have another alternative scenario that I want to introduce to you, where we can term this movement to the upper side as a 1-2 setup, where we can have these as the 1-2 setup. And after seeing the 1-2 setup, we started this Elliot structure to the upper side, where we can term this as the first wave, then whatever we are seeing over here, and the moment we lose the fib level 0.618, that can become more likely that we are seeing the formation of this wave 2 before we can start gearing up in the formation of that wave 3, then expect a wave 4 and then a wave 5 to the upper side. And I can change the color of this Elliot structure to represent that is an alternative scenario. And in case we lose this blue target area down here in the formation of this wave 4 of the scenario that I've been expecting in my previous videos, then there are chances that we might continue seeing the breakdown into the minimum retracement area in the formation of this wave 2, which we can be able to sketch out using the Fibonacci's, connecting them from the low of the second wave. That is the first wave down there to the high of that wave 1 at around the $0.67 mark, and that gives me a minimum target area between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, which lies between the 0.35 $0.49 mark and the $0.17323 mark, and that is the alternative scenario that we can expect here on the AGX chart in case the breakdown is so corrective and continue seeing lower prices and also lose areas that we had not anticipated here on the Fibonacci's. So that is what I'm expecting here on the breakdown targets, and also taking a look at the indicators to see what movements will be supported on the RSI. We are trading at around the 18 mark, meaning we have managed to get into the oversold region. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting that there are chances of continuing to see the breakdown to the lower side. So let's be patient and see how that plays out, and I'll be keeping you updated.